Hi everyone, welcome back to another episode of the investment banking industry structure. We continue our talk about full-fledged investment bank and what types of services they offer. We talked about brokerage, we talked about asset management, we talked about investment banking, and today we'll talk about research or the research department. This could be part of a brokerage firm or it could be a standalone business as a separate entity. What do people do or analysts do in research? We mentioned before research as part of the brokerage, and we call them sell-side analysts. They could be also working in the research here department as sell-side analysts, and they're not just any type of analyst. They can actually be different types. They can be financial analysts, can be technical analysts, they can be strategists, economists, whatever they can produce, depending on what type of report they produce. So they can issue equity or fixed income research reports and economic reports or asset related reports. It could be, for example, a currency analyst. It could be a derivatives analyst. So they could be also an economist. They can actually talk about the macroeconomy. Or it could be a strategist, talking about the different high-level strategies for the market, what to buy and what to sell in terms of asset classes. This is all different types or different hats that the sell-side analyst can actually wear when working under research. So, what do you do when you produce a report as an equity analyst or a fixed income analyst? You can actually do something called an initiation of coverage report. This is the first ever report that you produce as an analyst on a company. Whether you talk about its equity or bonds, basically this is what the report looks like. Have the company's name. Should usually be a bit lengthy report. Could be 10 pages plus. Sometimes could be 50 pages. It depends. And should have lots of details about the securities that you are analyzing. And this, we're talking about listed stocks, listed bonds or stocks. Why? Because you're trying to help brokerage firm to make money. How do brokerage firms make money? Through commission. So they want the more trading activity, the more commission brokerage firms make. There's another way of doing this, producing research. It's not that they just initiate coverage on any listed stock in the market, but it could be the other way around. Could be a company that's listed in the market. You're trying to find an analyst to cover them, because usually research analysts cover the most liquid names, because this is how they make money in terms of commissions. But if the company is not traded much, it would be a bit hard to produce a report on these companies. Sometimes the companies themselves ask, or they actually, let's say an XYZ company pays dollars on the amount of money to a research firm to actually produce this type of research. You might think that there could be a conflict of interest for this, but actually, as long as you disclose this to the clients, and as long as the fees that you get paid for producing this report are not really linked to the performance of the stock you're analyzing or the bond you're analyzing, you are okay. You are on the safe side. Just disclosure would be enough. So, and this is part also of the CFA Institute code and standards. This is no problem. This is what we call issuer paid research. It is up to the client to make sure that the advice that they're reading from this research report is actually logical and has enough rational basis. This research is very important because they are well known and they're exposed to the public. Clients can actually know the research reports, they can know the analysts, they can listen to them, talk to them. They are very open to the market, and this job is very important because they actually give you a good background on what are different other activities that investment banks actually do. Thank you very much.